right? So coming back to chapter 1, so we just took a look at all the 5 different business organizations. So I've mentioned before, right? We are going to be primarily focusing on sole proprietors, looking at a small business first, because this class is just to help you understand the basics of accounting, okay? But if you do want to pursue, classes in accounting, you do need to go up into university, because they're going to start teaching you how to do corporate or deal with corporate organizations on a grander scale. Okay, in this case, we're just taking it down and only focusing on a sole proprietor. Okay, now what kind of business activities do typical sole proprietors usually do, or small businesses, right? We have 3 type of businesses, right? Or type of business activities. Number 1 is going to be service companies, okay? Again, service companies could be anything that provides some kind of service to, society or to people in general, right? They don't sell a product. They usually just sell their time, okay? So a lot of service types of companies, right, it's basically based on investing time versus actually selling a product that you could use, okay? So anything like that could be any kind of consulting type of group. Any tax accountants usually consult with you. They don't sell a product. Telephone services, right? They don't really sell a product to you. They sell you, the service for you to have minutes to be able to call other people, okay? And again, another example could be, again, a lawyer too. They don't sell a product to you, they sell a service to you. So again, the purpose of understanding what a service is, it's pretty much like an idea that they try to sell to you in perspective of their time, okay? Where the second one is going to be called merchandising companies, okay? This is where they actually sell an actual product or good to individuals, okay? Now, of course, this entails in 2 different types of kind of business that you would normally see, right? You would either see retailers, which sell products based on individuals, or you could see wholesalers that sell products in bulk. Okay, so again, example for a retail could be any typical small grocery store, any clothing boutique. Excuse me. And then, of course, wholesale is going to be anything like Costco, Food for Less, right? Or Restaurant Depot, right? Those are things going to sell in large quantities in bulk. For primarily wholesalers actually sell to retailers, okay? Excuse me. But of course, we know Costco is both a wholesaler and a retailer, because they don't just sell in bulk to small businesses. They sell bulk to also the regular consumers as well, to at the individual level. Okay. And the last type of business activity is going to be manufacturing companies, okay? So companies that actually make the product that they sell to either a wholesaler, or they can sell it to the actual individual retailer themselves, like direct buying from the manufacturer itself. So any companies such as like Canon, right? They are a company that sells cameras. They can sell it to the stores like Best Buy or like Walmart or Target, right? Any store that sells electronics. Or you can actually buy it from the actual manufacturing website itself. You can actually go to Canon.com and be able to buy the camera directly from the manufacturer itself, okay? Now, again, a manufacturer could be a car dealership, right? They sell the cars to the general public, but they actually make the product for you, and they sell it there too, okay? So that's the 3 different types of business activities. The main primary focus on this class is going to be merchandising companies, right? we're not going to exercise manufacturing, because we are not going to be looking at what the cost it takes to purchase the raw materials, what time or what money is invested in the labor to create the product. Okay, this is the second step to actually accounting, because first it goes financial, then it goes managerial / cost accounting. Okay, so in this case, we're only focusing on the very primary ones, which is typically either the first or second one. But because we are focused primarily on merchandising, right, where we buy inventory and we sell inventory, right, where service would not have inventory. So that's why this class is going to be primarily revolved around a merchandising type of company, okay, where we're going to buy already made products and we're going to turn around and sell it for a profit. Okay. Then we're going to actually talk about what accounting is. So what is accounting? Well, in easy terms, okay, it's basically taking a transaction and understanding what this transaction is, and it exhausts the who, what, where, when, and why. Okay, not the what, not the where, but the where would be the what. Where did you buy it from? But in this case, right, it answers those questions right here: the who, the why, the what, and the how. Okay. So again, that's what, in easy terms, to understand what accounting is. But the actual definition of accounting is to have proof of a transaction and the procedures to understand how to properly interpret, record, sort, organize, and analyze these financial information, and being able to put it in means of organizing in specific accounts. Okay, so in this case, chapter 2 will actually look at a better definition of what it is, but it is the idea of recording, sorting, analyzing, and interpreting financial information. Okay, so again, it's going to answer what happened, right? What did you do? Did you go buy something? Okay, when did you buy it? It should be written on the receipt or the invoice or the bill, right? Why did this happen? Well, maybe I ran out of office supplies, so that's why I went to go and buy it. How? How is going to be, how did you pay for it? How much was it worth? All right. And of course, where is going to be one of those options. Where did you buy it from? What store? What location? Okay. And again, financial information is going to be used especially for the external and internal users. So again, why in the world are we processing financial statements for? Well, on the internal level, right, for internal users, it lets the workers of the company understand, okay, these are the profits. How is the business doing? What's the financial standing? Does it owe a lot of money? Is it doing well? Is it earning a lot of money? Okay, so then that keeps your workers satisfied and content, because they know that this company is, continuously doing good, and that they're able to, be able to pay the employees to continue to keep working for them. Okay. Now, for the external users is going to be anybody who is going to be outside of the company. So financial statements are very, very useful, especially for anybody who is a business loan, okay, a bank. Another example would be any other investors, okay, because if they could see that your financial statements look good, they may want to invest into your company, whether they want to invest as a silent partner or whether a bank wants to approve of you of a bank loan, okay, or a business loan. So that's what external users the financial statements could be useful for those external users, okay. So let's go ahead and talk about the bookkeeper versus the accountant. So in this class, you guys signed up for the accounting and bookkeeping program. So what does that entail? Well, let me tell you what a bookkeeper does. the main goal and the primary job of a bookkeeper is to analyze, sort, and record business transactions. Okay? That is all they are. That is all the responsibility is to do is to just simply record transactions. Okay? They are not able to ask why these business transactions happen. They are not allowed to interpret the information. Their sole job is just to record. Okay? They cannot add any advice saying, oh, I think you should spend your money here or you spend your money there. They are strictly to only record transactions and that's it. Where the accountant, okay, holds a lot more responsibility than a bookkeeper does, right? Because they are responsible to collect those source documents. They're responsible to analyze and to be able to produce financial statements. They are the ones that are also making the rules and guidelines for the bookkeeper to properly record a transaction in the proper books. They're the ones that's laying out all the rules saying you can do this, you could do that to the bookkeeper. And of course, the accountant can also do the bookkeeper's job, where the bookkeeper cannot do the accountant's job. Okay? So in this case, right, there's a lot more responsibility when it comes to the accountant because the accountant gets to do a lot more stuff. They get to analyze, and once the financial statements are done, they are also allowed to interpret and understand what it means the financial statements mean to the company. Okay? So in this case, right, the main job for a bookkeeper is to strictly only record transactions, where the accountant does more than record a transaction. They build the financial statements, they build the rules and regulations, they design the books themselves and tell the bookkeeper how to do their job. Okay, so that's the huge difference there. Now in this class, I'm not going to only teach you how to be just the bookkeeper. I'm going to teach you to be both the bookkeeper and the accountant, okay, in this class because, again, bookkeeping, it's a very narrow type of field that you want to go into. So in this case, I don't want to just groom you to be a bookkeeper. I'm going to groom you to be the accountant. So then when you do apply for a business, for a position in a company, you're able to do more than one position, which is going to be beyond bookkeeping. So I'm going to be grooming you to be the inventory manager, the payroll manager, the sales representative. I'm going to be grooming you to be able to do all of those. Okay? So I will teach you slowly how to be a bookkeeper first, and then I will teach you to become the accountant towards the very end of this program. Okay? Any questions so far?
No.
No.
Okay.
No.
All right, no worries. Okay, so now we're going to take a look at what the different types of accounting there are in the world, okay? So the 5 different types of areas of accounting is going to be 1, which is public accounting, which is going to be known for CPAs. Number 2 is going to be private accounting. Number 3 is going to be government accounting. Number 4 is going to be non-profit accounting. And then number 5 is going to be international accounting. Okay, so each one has specific criteria or specific job markets in each type of area. Okay, so we're going to focus on each and every single one today and going over what you can and can't do, and then so on and so forth. Okay. So let's dive into public accounting, which is also known as you need to have a CPA. Now, what is public accounting? It is when you do accounting for publicly traded companies, aka corporations, okay? Businesses at the massive level, okay? Now, you need to have a CPA license in order to be able to do public accounting, What is a CPA license? It stands for Certified Public Accounting, which allows you to be a professional in public accounting. Now, there's a lot of rules and regulations because if you do pursue a CPA, you need to have not only a bachelor's, in this case, you need a bachelor's, and you need to take a couple courses in order for you to obtain your CPA license, okay? Not necessarily you have to be a master's. There are programs out there where you can bypass the master's, but you do have to involve enough hours in school or enough to be able to for you to be able to take the exam for the CPA license. The CPA license is split into 4 different exams, okay, where they test you on taxation, they test you on general accounting, and ethics is one of them. And I don't remember what the last exam is for it, but they're very long and expensive tests to take. And you have to be able to take all 4 of them within 6 months of each other. Okay, if you only take 1, you're not a certified public accounting. If you only take 3 and fail the 4th one, you're still not a certified public accountant. You need to master all 4 exams in order to receive a CPA license, because the huge one is ethics. Okay, ethics, whether you're doing right for the company or right for society. That's the huge one that you need to know, and you need to be an expert at accounting. You need to make sure you don't make those minor mistakes here and there. You have to be an expert, and that's what certifying for a CPA does. It gives you the upper hand saying that you're a professional in this type of accounting. Okay, so knowing the ins and outs of the tax rules for all corporations and understanding what the rules are in terms of journalizing and recording, properly recording the books for a publicly traded company. Okay, now what are the things that are you typically involved in public accounting? Number 1 is going to be auditing, okay? Just because, again, many corporations, right, when you do auditing, it's basically going back into the past and making sure that you verify that this person has done their bookkeeping correctly or keeping a good track record of their transactions. So this takes a lot of time and effort, because think about it. A corporation is really huge. Imagine how many transactions a corporation can do in one day, especially when they have multiple locations in multiple cities in multiple states. And thinking about how you can compile all of that information takes a long time, okay? Especially if you have to go through everything that they've gone through in regards to their daily transactions all the way up to their quarterly transactions and yearly transactions, okay? So that's a huge one. And again, when you have a CPA license, you could have the opportunity to join one of the big 4 accounting firms, which offers both like auditing and taxation and consulting services, okay? Now, if you don't know who the big 4 is, the big 4 accounting firms, if you heard of Deloitte or Ernst & Young, okay, PricewaterhouseCoopers. I think PricewaterhouseCoopers is no longer part of the big 4, but it's up there. Okay, those are going to be considered the top major accounting firms out there that is for publicly traded companies. Okay. So again, auditing is basically going through the company's transactions to make sure that there's no fraudulent charges or anything that looks suspicious, and making sure that that they properly, follow the rules and guidelines in regards to properly doing their books. Okay. Second one that you could do there is taxation. Taxation is going to be one of the biggest parts of being a certified public accountant, okay? Just because taxation is a lot of rules, especially with the federal government, always changing the rules every year, right? There's, I believe, in November, we're going to have a new set of tax tables, right? A new set of tax rules. So, therefore, every year, um, people who are in the taxation professional for publicly traded companies, they need to be updated with their tax tables. They're making sure that they do their taxes correctly, making sure that they know what they can write off as a deduction or as a benefit for the taxes. So whether it's they add more taxes or take away, what they can do, what they can't do. Okay, making sure they have all the line items. Okay, so again, yes, so taxing corporations is going to be one of the hugest ones, because again, if a business has transactions for that day and pays their employees at the end of the week, right there, that's room for taxation right there, right? Collecting sales tax for the daily transactions, but also processing the taxes for for having employees both federal, state, and local, if there is any. Okay. And then of course we have forensic accounting, which is actually I actually thought this was one of the most interesting fields that I had experienced before. Forensic accounting basically acts as if you are an investigator, okay, where you're investigating financial statements that corporations release. So in this case, you're in more of a sense. That's why you need to have a CPA license to understand how auditing works, but how tax works as well, because what forensic accounting does is it analyzes the financial statements and the transactions that each company does, right? Looks through the books to see if there's any room for any red flags or possibilities of fraudulent charges. Okay, so auditing is basically just scanning the basically backtracking to scan if the company did it correctly, where forensic actually tries to suspect or assume that there's fraudulent charges by rescanning the auditor's work to make sure that the auditor isn't doing their own fraudulent charges in doing a corporation's work. So again, you need to have a CPA license to be able to look at publicly traded information to be able to do forensic accounting. And it's really fun. This class is really fun. That's where we learned about Enron and how they corrupted the corporation itself and frauded the federal and state governments. And even frauded their consumers, their customers that paid into Enron. They frauded all of them. Okay. And forensic accounting. So in that class, like I got to take a look at a corporation and take a look at their financial statements and kind of analyze what kind of possibilities or red flags that they can have in order to have possibility of fraud and try to cover it up. Okay, so very, very interesting. If you are interested in learning more, again, this is going to be something that you may want to consider in the future. That's definitely something that you can definitely go to looking into either one of the big four major accounting companies out there, or you can actually just do your research and see if there's any courses out there, and maybe even seek a tax advisor to see what it takes to become at this level. Okay. Any questions here?
And it almost takes a year to be one, and try to finish it all. And you also, and how expensive is it?
I believe each exam is about $400 each times four,
Oh, okay.
which
That's
isn't
not too bad.
bad, right?
Yeah.
But it depends on what you're trying to pursue. Now, of course, if you to pursue a master's, that's already an 8-year program, right? Then you're able to successfully be able to do the CPA. But if you are not doing a master's and you just do a bachelor's with additional extra hours, I believe you have to have a total of 150 hours of accounting courses. That includes ethics, what I'm talking about in college, because I was going to pursue my CPA. You can do it that way, but it's a lot more difficult because if you do pursue a master's, and let's say you do a master's in taxation, the science of taxation, right? Then you would be more so in the taxation field, and then that double verifies you because not only are you CPA licensed, you have a master's degree in taxation. So it depends on your time limit in regards to, you do need to go to school, you do need to pursue a bachelor's, you do need to pursue, if you are going to do taxation, we do recommend you to do a master's. So this whole entire time span could take anywhere to 8 to 10 years.
Oh, okay.
So
And you said,
it's not like you can just wake up one day and be like,
yeah,
I'm going to be a CPA. No.
yeah, and you said you also have to take ethics classes.
Yes,
Now? Okay,
correct. Ethics in business. Okay?
okay, okay. That's all. Thank you.
No worries, no worries. So again, it's a very interesting field. Again, if you want to go up that corporate ladder where you do want to be able to look at corporations' financial statements, or just be able to record the books for them, right? That's where the big four accounting firms come into play. And they actually, it's actually kind of hard to get in there because you do need to know somebody, but they do have a bunch of conventions. I believe there was an accounting convention. I believe Robert Half does those accounting conventions that you're able to actually be able to meet those kind of corporations to get yourself into that kind of business. Okay. All right, so next is going to be private accounting. So private accounting is going to be for not publicly traded companies, obviously, right? It's going to be for more smaller scale type of companies. So what can you do under private? Of course, you could do the same things, but obviously not as grander scale. You could do taxation for smaller businesses. You could do auditing for smaller businesses. And this is where we're kind of going to be in the private sector, where we're doing financial accounting, which allows us to record, collect, and process financial statement. Then there's cost accounting, or managerial accounting, where we break it down to looking at how much it's going to cost us to build a product, or what labor cost it's going to take in order to create the product, okay? And then there's going to be treasury accounting, where these are your typical bank tellers, or those people who sit in the bank that offers you those types of like business loans, or they offer you some kind of way to create like a savings account. Those are going to be your treasury type of accountants. And then you also have financial planning and analytical accounting, which basically allows you to look at your return on investments. So again, their job is to look at your profits and look at how much you started out with, and basically do reports and basically tell you what your return on investment is. So this is what you started out with, right? How much how much did you invest into your company in order for you to come out in this kind of field? Like how much you actually earned and how much did you actually benefit? So again, there's a lot of different types of accounting that you can have. And again, we are going to be in the private accounting because our main focus is learning the very, very basics of accounting, which if you go to any college or any course or any schooling for accounting, the number one thing is they're going to teach you is financial accounting, because you need to understand the fundamentals of how profits work in the first place, right? It's not cutthroat. It's not where you say, I'm going to buy this and sell it for this amount. There's a lot more to that than just meets the eye in this case, right? Where we need to analyze, we need to understand what are the costs of actually operating a whole entire business. What does it mean to run a business? Okay? How do we make those profits? Okay? So this is private accounting. Okay? Then we're going to talk about government accounting. So this is for basically accounting for government agencies because again, it's a professional field, yes, for government agencies. So such as anything that is funded by the government. So things like One Stop is funded by the government. Social Security is going to be funded by the government. And et cetera, right? Those kind of organizations, they're going to have a different type of, accounting that's going to be involved because they need to be able to manage their money. They need to have resource management planning. They need budgetary planning. They need agency fund management in regards to focusing on what kind of programs, how are they dividing the federal money, or how is this agency, right? If it's a state agency, how are they able to take the money that they received from the federal and distribute it into certain sectors or sections that can provide funding resources, right? They need that kind of accounting where they need to manage and plan what they can do in regards to dividing the money, okay? They need those kind of people. And same thing here too. They need people to audit their financial information because they need to know how much money did they actually spend for these resources. Okay? So that's that right there. Again, because for this kind of class, our assumption is that we are focusing mainly on for-profit organizations. So not government agencies. So we're more for the private and public sector, okay? Not so much for the government and the rest, okay? Then we also talk about non-for-profit, right? They have specific different taxes or special taxes that they have to go for. So that means if they have special taxes, they need special people to be able to help them either file for taxes or special type of accounting because they cannot follow the same rules and guidelines as a for-profit organization, okay? So they need a budgetary accountant, they need a funds management accountant just like the government, right? They need to be able to see what sections that need funding for, or even for since they are doing fundraisers, right? There's rules and guidelines on accepting donations, right? How much of it can be taxed and how much can you keep? That's going to be something that you need to be able to do accounting for, is being able to be, when you receive a generous donation, how do you tax that amount on there, okay? Again, but this is for nonprofit organizations. They do follow separate different types, so they do have different types of accounting here. Okay. And then, of course, last but not least, international accounting, which we did talk very, very briefly about. We won't actually take a look in this until chapter 4, which is Thursday. So understanding international accounting is going to be looking at foreign currency management, right? Especially when you're converting from the US dollar to foreign currency, right? You need to understand how to be able to manage and be able to, properly, if you're purchasing things from the US and transporting it to that country, you need to be able to convert it accordingly and properly do the accounting based on that. What charges did you have to make in order to convert this amount into the foreign currency, okay? You also need to do regional accounting, meaning every single country has their own different region, which then has their own different types of accounting there beyond that. So again, if you're doing sales overseas, right, you need to understand which region is going to be the most appropriate for you to do business. But again, understanding what the rules and regulations, because they might have different, like in California, right? We have federal, state, and local. Well, in other countries, they have countries, cities, and regions that you have to do proper accounting for. Okay. And again, it focuses mostly on businesses that business transactions that are from foreign countries. So again, there are different rules and guidelines that you need to know that you can do. So again, if you are planning to do international trade or some kind of business overseas, you do need someone who is a professional in the accounting in the specific country that you are planning to do business in. So again, you may have to follow if you have open up a business in China, you need to make sure that you know all the rules and regulations and how they do their accounting in China, right? Because they could follow a complete set of different rules than it is in the United States. Okay. All right. Any questions in regards to the 5 different types of areas of accounting?
No.
No.
Okay. So now let's go ahead and talk about financial reports. Okay. There are 4 important financial reports or financial statements, whichever one you want to call them, that are obligated for every single business in the world that they have to complete, because these 4 financial statements pretty much tells you your financial standing, what your net worth is, what expenses that you have in regards to the eyes of your internal and external users, right? These 4 statements provide very crucial information on what to do next if moving on forward. So again, this is good for internal users, because if they are given to profit managers, they can take a look at this and find ways and methods to either increase profits or decrease costs, okay? Again, if it's for your external users, it could show them that this is a good investment for them to invest into your company. Okay? So let's go ahead and go through each and every single one of them. So number 1 is going to be your income statement, also known as your profit and loss. Okay, so P&L, however you know it, P&L, income statement, whatever it is, it determines profitability. Okay, straightforward, right? It determines whether your company is making a profit. Well, what determines profitability? Well, in this case, right, we're going to take all of our generated revenues. So taking a look at all the income that the company has earned or generated from either 1, selling a product or service, okay, or 2, from other means of getting money into the company, whether they provide a separate service that has nothing to do with the company, or they're partnered up with another corporation, or if they have private investors putting their own money into this company, then yes, that's going to be considered any type of income. Or if the company invests in another share of another corporation, right, and gets dividends, that's considered income to the company. Okay. And once you take all of that, you're going to counter them against all of the expenses it takes you to operate your business. So again, an example of an operating expense would be rent expense, right? How are you going to operate your business if you don't have an actual store location for you to process your transactions, right? So rent expense is going to be considered something that you need to do in order to operate your business. Advertising expense. How are you going to let people know that you're selling this product? You need to add money into advertisement for that, for people to see that you're selling this product for this price, right? Entice people to want to buy your product. And that's what you're going to do. So you take all your generated revenue and you counter them against all of your operating expenses for you to run your business. And at the end, if your sales or your revenues exceeds your expenses, you made a profit. If your cost exceeds the amount of generated income, you have a loss. because you spent more than what you've earned. Okay, think of it that way. All right, and that's the importance of understanding the income statement, because it tells you, are you actually making too many expenses this month? Are you making more money this month? Okay, because the idea here is that once you have a profit, you have that choice. Are you going to reinvest it into your company so you can continuously make more and more and more money? Or are you going to take that profit and pocket it into your pocket and take it home, and then just have your business barely make it by every single month or every single given accounting period? Okay? So that's the idea of understanding what the profit and loss can do for a company. Okay? All right, and then again, this one is going to be determined whether a business is doing well or not, right? If you understand positive numbers and making a profit, then you're assuming that your business is doing good. But actually internally, costs or expenses do vary on depending on what your business is, whether you have a specific selling point or not. So if you do seasons, obviously, what season would you market your products for? You might have a bigger profit for that season, but you might have to incur more expenses in order to market yourself. So again, profit and loss could also determine whether you are doing good or not, but at the end of the day, it's just basically managing how many expenses you have for that certain given time period versus the generated revenue that you earn. Okay. So then, of course, if you do choose to reinvest into your company, this is where the statement of owner's equity is going to come into play. Now, depending on what kind of business you are, if you're a sole proprietor, you have owner's equity. If you're a partnership, you have partner's equity. If you are a corporation, you have stockholders' equity. Okay? And what equity is it basically gives you your net worth of the company. It's your total value of what your company stands at. Okay? Now, what increases or what decreases equity is, especially because we're looking at a small business, we're looking at a sole proprietor, it's going to be, as far as increasing equity, is going to be any capital contributions, so investing your own money into the company, or reinvesting your profits back into your company increases equity. It increases the value of your company. Okay? Whereas things that take away are going to be owner's withdrawal, right? Because when we talk about going through business as a sole proprietor doesn't actually have to, in fact, work for the company. They own the company. They can take money whenever they like, because what's the owner of the company, right? If we understand the owner and the business is one, he can take the money out at any given time without any, payment or any reason to take the money, because it's his company, right? So that means they can take out money whenever they like, and that's going to be considered an owner's withdrawal, which decreases the value of the company, right? Think about it in reality, right? If you have a savings jar, the more money you put into it, the more savings you have. The more money you take out of it, the less savings that you have, right? So think of it like the savings jar as equity, right? The more you put money, the more value that bucket has. The more you take out, the less value it has. Okay? And that is the statement of owner's equity. So this tells you what the value or the net worth of your company stands as far as at the end of a given accounting period. Okay? Then we're going to talk about the balance sheet. So the balance sheet basically tests this one accounting equation, which is going to be your assets equals your liabilities plus your equity. So this takes in regards to everything that you own, and they make it equivalent to everything that you owe plus the value of your company. So that's how you understand this. So again, assets is everything that you own. So anything like property, and cash, inventory, patents, right? You own all of that. It's all your property. And everything that you owe, which is any business loans, any bank accounts, or any, other accounts that you owe to other companies, right? It's going to be everything that you owe, right? You owe them money. And of course, we talked about the value of the company, which is your owner's equity. So this statement or this equation must hold true at all times. For any reason that you have an imbalance in your balance sheet, then you have a fault in your transaction somewhere in your daily to day-to-day transactions, which is whatever the bookkeeper has done. Okay, so that means you have a mistake in there somewhere that caused you to have an imbalance in your balance sheet. So again, the number one thing that we're focusing on in the balance sheet is to test the accounting equation whether your assets equal your liabilities plus your equity. Okay. And then the last statement that we have here is going to be statement of cash flows. Now, this one, right, when we understand the statement of cash flows, it's literally taking a look at a business and understanding how much cash is actually flowing into the company versus the cash that's flowing out from the company. Now, when we go into when we dive into chapter 4, we're going to take a look at what it means to be a cash basis versus an accrual basis. An accrual basis allows you to have invisible money, meaning I can have my customers owe me money, but it still reflects as I made a profit, even though I didn't actually receive money. Where a cash basis is strictly cash and cash only. If you don't have cash, don't record it until you actually receive cash. So in this case, what a statement of cash flow does is, since most accounting is actually preferably better off as an accrual basis, right? What this does is it takes the accrual basis of accounting and converts it to cash. It's actually looking down to the core of a business and looking at how much actual physical cash actually came into the company and how much actual physical cash did you spend to either invest or finance or whatever it is for the company. Okay, you actually spent in order to operate your company. Okay, so this is the statement of cash flows. Again, we actually won't take a look at into all 4 financial statements until towards the very end of the class. So about week 13 and 14 is where we dive into the closing process, where we actually physically go through and produce financial statements. Okay, so I will walk you through this one by one each financial statement, so it makes a little more sense on why we need to do this. So again, what does this statement do? It literally tests to see how much cash is actually flowing in and how much you're actually spending the money. Okay. Any questions in regards to the 4 financial statements?
No.
Okay.
Yeah. No.
Okay. All right, now we're going to talk about internal controls. Okay, so this is where the Sarbanes-Oxley Act is going to be coming into play, because this is why we have this type of system going on in many different type of companies, right? You need to have a chain of command, right? Meaning you have the overseeing president at the top, and underneath the president is going to be your treasury, your profits, your sales manager, and underneath them is going to be their team to do whatever section that they're under. So again, it's called a chain of command. And what internal controls does is it just eliminates the possibility of having, the possibility of fraud. Okay, how so? So, for example, back then, right, human resources, which is responsible for cutting out the checks, right? in the very beginning, that person was able to write their own paycheck and be able to process it without having anybody know or verify that they are being paid, right? Because the person was responsible to just cut the checks out and pay all the employees, right? So the room for fraudulent charges is that everybody else can get a normal paycheck cut, right? While the HR can write themselves a generous check for themselves, okay? So this is why when back then in the past, because of Enron, they were doing this, right? The I forgot who the head guy of Enron was, but he was cutting checks to the vice president, the CFO of Enron, personally. And that's illegal. Yes, it is, because no one else is backing it up or verifying that. Why is this guy getting money for what? Right? It was only one person that's cutting the check. He was also the one who cut the check for Arthur Anderson, who was the guy who was one of the major accounting firms who actually was paid off to properly go through the books, and we call them cook the books, where they fry out the old books and then they write new books with the perfect transactions in them. So he got paid off by Enron to properly do that without anybody else verifying that he's doing that. So that is exactly why Sarbanes-Oxley Act was placed into on all businesses, because of that act of fraudulent crime. So instead of having the HR be able to write their checks, right, he has to have the president look at, or the advisor look at it and then send it to the president, and the president signs off the checks, and then that's considered internal controls, because not only do you have one person involved in the transaction, you have multiple people verifying that that transaction is true. Okay, so again, that's the example there. HR, they can write themselves the check, but they have to have an advisor to look over it, and then they have to have the president sign it. So therefore, there are multiple hands going up the chain of command to verify that this transaction is valid. That is internal controls. Okay. So, course review. So this is all that we learned in chapter 1, right? We went over what the definition of the nature of a business is. We went over the 5 different types of business organizations. So here you go. I give you a pretty much summary of what they are. Now in this class, because this is the very beginning of accounting, I'm not going to be expecting you to know anything more than just what those businesses are and what separates them. Okay, so again, what separates them is sole proprietor, 1 owner; partnership, 2 or more owners; corporations, no owners, but the shareholders, which is everybody. Anybody can own the company. Limited liability company, once again, it's a hybrid between partnership and corporation. And again, non-for-profit has no owners. It's a voluntary-based type of organization. That's all I need you to know. Because in this class, right, we're going to take the aspect of a sole proprietor, right, a small business, and we're going to follow it through for the rest of this class. So in this case, you don't need to know what benefits you can have as a corporation. Okay, so I just want you to know the bare minimum, because once again, I'm not testing you on corporations. I'm testing you on sole proprietors. Okay. We also went over the 3 different types of business activities, right? Service, manufacturing, and merchandising. We also went over the different types, different types of areas of accounting, right? Whether it's public, private, government, nonprofit, or international, right? But our main focus is private accounting, because we're learning the very basics of the fundamentals of accounting, which starts off at financial accounting, right? We took a look at all 4 different types of financial statements and the difference between a bookkeeper and the accountant. Okay. So any questions in regards to chapter 1 at all?
No.
No.
Okay, so then let's go ahead and complete the exercises here for chapter 1. Okay, so chapter 1, question number 1 is, what is the nature of a business?
Is making sure the customers get their money's worth, make profit, or make savings.
Good. Okay, good. Make profits and ensure customers okay, but more so not focusing on the customers aspect, but it is more so for the companies to make money. Okay.
Maximize profit, correct?
Yes, they must make a profit. That's most goals of businesses, is that they're trying to make money. So in this case, what's the actual definition?
Maximize profit.
Maximize profit, but what's the actual definition? So
An organization in which basic resources, materials, labor are assembled, processed to provide goods and services.
good, right? Good.
Yeah, that's a
So
little long, but yes.
that's, yes. So in this case, that's the nature of a business, is to yeah, I'm gonna summarize this, to create products or services to provide to consumers, right? And right, ultimate goal is to make money. Right? All right, what are the 5 types of business organizations?
Sole proprietor, partnerships, corporations, limited liability company, aka LLC, and then nonprofit organization.
Good. Sole proprietors, partnerships. Oops. Excuse my typing. Partnerships, LLCs, corporations. I'm gonna put corp for short, and profit. Okay, good. All right. Now, can anybody give me examples of each and every single type of business organization? Like, what's a good example of a sole proprietor?
It's only one owner
Mm,
owns the company.
okay. Example, like.
Oh, um, I can't think of one.
Mhm.
I'll just do it like Walmart or something like that.
Okay, so Walmart would not be an example of a sole proprietor.
Oh yeah, I just couldn't think of one. I just gave out like a corporation instead.
Okay, so corporation. Okay, so I put corporation under 4. So good. Walmart is an example of a corporation, right? So in this case, a sole proprietor could be, any typical mom and pop shops, right? Okay. Any small business would typically be a sole proprietor, right? Okay. What?
Right.
Go ahead. Okay. What about a partnership?
So partnerships, does that mean like law firms, for example?
Law firms. Okay, so law firms. Okay, so law firms, yes, it could be a limited liability partnership. Yes, good. So LLP, which is a partnership, right? Could be any law firm, right? Usually they always have the person's last name, something and something, right? Something and Sawyer, right? Law firm. Yes, good. Oh, that's a good example of a partnership. Good. Okay. Okay, next one is an LLC. This one's a little harder, but actually, it's actually really funny because there's a lot of corporations out there that you can easily mistake as a corporation. Which, if you actually do research into it, they will end up being an LLC. In this case, I'll go ahead and just say anything with LLC. Usually, those kind of companies, right? They're smaller companies, and usually they have LLC attached behind them. Yes. So we got corporation, we got Walmart. What else?
You had said Apple before?
Yes, we got Apple, we got Target. Okay. What about a non-profit organization? So I did give you a couple examples in class. What are they? Or an example of it.
PETA.
PETA.
Breast cancer, Elizabeth Coleman.
Breast cancer. I believe the pink ribbon. I forgot what that one's called. You got Susan G. Komen, yes. Okay, good. All right. So then, number 4, what are the 3 types of business activities?
Service
Services.
companies,
Good, service,
merchandising companies,
merchandising. Okay. What's the last one?
Manufacturing.
Good, manufacturer. Good. So people who provide a service, right? Whether it's just an idea, okay? Merchandising is a product, and manufacturing is actually building the product. Okay. What is accounting?
Is the systematic process of analyzing, recording, summarizing, reporting, reviewing, and interpreting financial information.
Okay, all of those ing words, right? Sorting, recording, analyzing, organizing, whichever way that you can think about it. Okay, organizing financial, either data or info, whichever one that makes sense to you. Good. Okay. Number 6, what are the 5 areas of accounting?
Public, private, government, nonprofit, international.
And international. Okay, good. Number 7, okay, what are the 4 financial statements?
income statement, statement of owner's equity, statement of cash flow and balance sheet.
Okay, statement of equity, statement of cash flows, and balance sheet. Okay. And then last but not least, what is the difference between the bookkeeper and the accountant?
The bookkeeper just records. I can't think out of my head. I gotta look at my notes.
Oh, that
Records transactions.
good. Records just business transactions. And what does the accountant do?
Analyzes.
Analyzes. What else do they do?
Produces financial statements.
Produces financial statements. Good. Okay. Make sure you do know this, that the accountant can also do bookkeeping as well. If there is no bookkeeper job position, the accountant can do it too. However, the bookkeeper cannot do the accountant's job. Okay? Make sure you understand that. Okay? Awesome. So that is it for today. Again, I will post these answer sheets on the Google Classroom. So in case you need it for some kind of study guide, study purposes, reasons, okay?